Investments in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BASL, and certification from NASM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Welcome to the Quit Podcast, brought to you by Dyota Solutions Private Limited, SEBI registered investment advisor. License number INA 000007216.
Namaskaram. Hello, everyone. Welcome to the Quit Podcast. And we decided this time that we are going to go completely off the chart. This time we have decided to bring in a Twitter gent with whom I have had a few interactions on Twitter. And the reason why I really liked or wanted to talk to this person is primarily because he speaks his mind, right? He speaks his mind with respect to how his investment journey has gone and how his affinity towards index-based investments go about, and that is something which some parts of it which resonated with me, not because I completely agree with him, not because I disagree with him, but some parts resonated with me, and that is the reason why I decided to call this gent. He goes by the handle @CBE_SAM and calls himself Alan on Twitter. He has requested that he remains anonymous, and I completely respect it. The curious part was, if you see his Twitter bio, it says financial freedom fighter, Nifty 500 index head, aspiring NPS pensioner, and a successful EPFO balance transferer. Nothing in this world can be amalgamated into one individual in this world as curious as this. So I decided to call Alan. Alan, welcome to the Quit Podcast. Thank you very, very much for doing this with us.
Hey Nanda, thanks a lot for getting me. Really appreciate it. I keep seeing your tweets, and the respect is mutual. And like you said, it's just a friendly chat, and I really appreciate you reaching out to me for this thing. We can start, and like you said, it can be a casual conversation between two friends. And just to have a caveat, I'm not an influencer. I don't intend to be one. I'm just someone who discovered personal finance in the last 10-12 years. I had my share of mistakes. So I just want to share that point of view, learnings, and would like to learn anything from you. So I'm open to that. Ramba, thanks. So you are Meklangla.
Thank you very much. On that note, Arambiklangla. So, Alan, what do you do for a living? You need not get into specifics. You can just tell me broadly so that people understand what is your what's your profile, right? I just need the broad profile, like what do you do for a living? You don't need to tell the company's name. How old are you? A little bit about your family structure, and any background information that influenced your investment ideas. You said that you started this journey about 12 years ago. What prompted you to start?
So perfect. So now on the Coimbatore on the person. So based out of Coimbatore. So I work in a digital marketing company. I lead the practice, and married with a daughter, 6-7 years old. So it's very quick about my family and my background. So I have nothing to do with finance. In fact, only affinity I had with finances, கூட இருந்த ஃப்ரெண்ட்ஸ் எல்லாம் வந்து தேவர் இன் யூடிஐ மியூச்சுவல் ஃபண்ட்ஸ் கார்வியில் ஒர்க் பண்ணிட்டு இருந்தாங்க 15 years back. So The only regret I had is that I should have let's listen to them like 15 years back when they were doing investing.
Right.
Like small monies. Like அப்ப வந்து நம்மளுக்கு எந்த ஒரு லைக் இந்த மாதிரி இப்ப இருக்க மாதிரி ரிசோர்சஸ் இல்ல யூடியூப்ல புக்ஸ் ஆகட்டும் எதுவுமே இல்ல. So but that was my starting point. But luckily I started something in 2010-11. We'll discuss going forward. But and again, background is this, and I worked in some startups also, which helped me a lot. And one thing which helped me to understand the importance of equity is especially the ESOPs, which turned out to be good for me. Luckily it happened like 8-9 years back. So அது வந்து எனக்கு ஈக்விட்டி மேல ஒரு டிஃபரெண்ட் பெர்ஸ்பெக்டிவ் கொண்டு வந்துச்சுங்க.
Absolutely.
So அங்கிருந்து ஸ்டார்ட் ஆச்சு எல்லாம். So that's the quick background.
So Alan, why do you invest? I mean, there must be, see, everybody has a underlying reason why they invest, right? Some people may say, I want to make sure that my kids get the best education, right? I'm just saying one example, okay? And the madri, what is your primary purpose of investing? If there are 20 reasons, I just want you to name the first one.
Done. I think makes sense. See, when I say 2010 na start பண்ணப்போ it was very short term thinking. So I don't know whether people know about the companies like Funds India. Not popular now, but they are good platforms. Then it was very few companies which offering plans. Scriptbox were there. So அதெல்லாம் பார்த்துட்டு I used to start something in debt funds. I don't know about equity, nothing. I don't know nothing. I just started. So SAP of some 5,000, 6,000, 8,000 random monies. ஓகேங்களா? அப்போ வந்து சம்பளம் it was normal. So 12 years back, like 50-60K. But I used to save a lot. So one good thing I did is while I used to spend புது ஃபோன் வாங்குறது இதெல்லாம் like useless spends which I look back now, but I used to save at least some 10,000-15,000 rupees even then. So I used to invest that. ஆனா என்ன நான் தப்பு பண்ணிட்டேன்னா I had a very short term view. Okay, இன்வெஸ்ட் பண்ணுவேன், ஒரு 1.5 வருஷம் போனதுக்கு அப்புறம் எடுத்து I'll either upgrade something or I'll buy some bike. I bought a bike based on with that money. அதுக்கப்புறம் அதே மாதிரி ஒரு 3 வருஷம் சேர்த்து வச்சுட்டு I bought a car, used car, but still. So அந்த மாதிரி பண்ணிட்டு இருந்தேன். Why I invest? The reason is very simple. Again, there are two parts to it. When I had no clue, I invested because it's a habit. So பணம் மிச்சம் இருக்குது, என்ன பண்ணலாம்? Okay, I used to invest in some debt funds because Funds India was very easily accessible then. அதுக்கப்புறம் like I said, I joined the startups and everything, and they gave me shares. I did nothing about ESOP, but I think in 2015, 2016 types, I went into a little bit of, okay, let's do equity. So எனக்கு ஒரு பெனிஃபிட், என் ஃப்ரெண்ட்ஸ் எல்லாம் வந்து they were in the mutual funds industry or banking industry. They used to show me the portfolios of people who have 65 lakhs in mutual funds until about 2010-11, right? I was like, அப்பதான் வந்து I realized that there are people with serious money invested in mutual funds. Then why I'm not doing this? அப்படி ஆரம்பிச்சுதான் வந்து என்னோட equity journey. It was in 2000, I would say 13, 14ish. 14 and 15, I was like investing at least some 30-40K a month in equity. Very less when look back now, but it started. So அங்கிருந்து start ஆச்சுங்க. And now it's totally different perspective. Why investors totally evolved over a period of time. Like for most people, it will evolve, right? So now the reason is it's totally different. So like I invest for various things, goals and retirement, and creating a corpus. Might be some generational corpus while it's very small, but at least I want to start. So there are multiple reasons now, but the fundamental thing is the philosophy. Like work hard to increase your salary, save good amount of money, and live. Don't live very frugally so you miss your lives, like good things in life. So live a comfortably good life, try to save as much as possible, and invest properly. Is என்னோட present focus. And of course, like we'll talk more about the avenues, but my point now is there is a good gap between my earning and my saving, and that money I invest for future returns. And all things I missed in the last 10 years, I want to avoid that in the coming decade. So it will take care of the decades after that. Other perspective. I hope it's clear.
Yeah, absolutely. So you started off invest out of a habit. Huh? சின்ன வயசுல people develop habits, and thankfully you developed a good habit, right?
No, I had my share of bad habits also. For example, I used to spend on smartphones. So I have some fascination towards technology. So I used to buy smartphones then, like not iPhones. It was very expensive for me even then. I used to buy lots of Android phones. I'm talking about 2010, 11, 12 and all. I used to buy every phone every 1 year. So that time 30, 40K. That's what I did. I spent some SIP of 3,000 rupees every month. Once it becomes 35, 40K, I'll buy a phone, right?
Actually, it's a great idea. Okay, in fact, I would call it as forward EMI, right? People tend to
Correct.
buy the phone paying an EMI later, right?
Yeah.
What you have done is you've done a forward EMI, right? You've paid the EMI before, accumulated it in your own hands, and then went cash down to buy. It's a great way to achieve your short-term goals. So, knowingly or unknowingly, you are now sharing a very, very what I would call a pearl of wisdom. Huh? Fantastic. So, you did speak about multiple things that were running in your mind, including retirement, right? For me, I mean, I always believe that people may not articulate it exactly that way, but the primary reason why people start investing is to ensure that they want to buy their freedom, right? In the sense that today my hand is a giving hand, right? Because I'm earning money. Tomorrow I'm going to stop earning money, and at that point of time, if my hand goes from a giving hand to a receiving hand, it is going to be a huge problem, right? So this is the primary reason why most people invest, though they may not articulate it. But I could catch it from whatever you said, right? You said apart from the multiple things, 10-year goals, 5 years and all that, you did speak about retirement as well. So I will hold on to that. Now, when it comes to retirement corpus specifically, and it takes a lot of time, right, to achieve retirement corpus, sometimes even 10-15 years, right? And it requires a lot of mental strength, in my view, right? How do you view investments? Is it purely mathematics for you, or is there a psychology that you think comes to play? And what was that in your mind? And good or bad, how did you use it or overcome that challenge?
Perfect. So I'll take two parts to it. So one வந்து நீங்க freedom பத்தி பேசுனீங்க. So people invest for freedom and சொல்லிட்டு. Second, I come to the goals, especially long-term goals like retirement you mentioned, right? So, but what I find is that 99.9% people don't understand that they can buy their freedom through investments, right? The basic problem, I believe, it's because of the lack of education or literature we have. At least in my era, there was literally only few blogs. Script blogs used to do some blogs. There was only US blogs, right? And we are gifted now to have people like Shyam Shekhar sir. So I thought, and V. Nagapan sir. So like, and Subra from Twitter, YouTube, right? So, and those people are not doing this for money, right? They're doing this for passion. And I wish I had had a chance to hear them out at least some 10 years back. I would have been a much better person. One is that. And number two, even despite that wisdom available for free for most of us, like we expect stock tips from them, most people, right? So they also tell same thing, right? So luckily, people like Sham Shekhar sir, Nagapan sir, who agreed to meet me in Chennai when I went, very genuine, like thankful to them, that they took some same thing, saying that I was like a fan of them. In another point of view, I read a lot of books. So we have Tamil Tamil finance domain, we have some legends like that. So why should you look at elsewhere, right? I used to read them a lot, right? But one is that despite all those things, we have this influencers who people claim to people that we can quick riches, right? So other than the problem இருக்குங்க, people made the long term aspect of investments, forget about retirement, right? நானே பாத்தீங்கன்னா, despite I had a friends living with me in the same house before marriage, about there in the investments world, I couldn't leverage them, right? It's ignorance my part, but now there's lots of information available. People are not using this, or they're doing the wrong space, like crypto, right? Because they want to get rich quick. So அது வந்து என்னோட first mind block which went off in 2015-16 is exactly this. என்ன பண்ணேன்னா, so just invest in equity, keep it for 3-5 years, அதுக்கப்புறம் பார்த்துக்கலாம், அப்படிதான் ஆரம்பிச்சதுங்க. அது அப்போ வந்து ஆக்டிவ் ஃபண்ட்ஸ் தான். ஸோ அப்போ வந்து எனக்கு ஃப்ரெண்ட்ஸ் எல்லாம் இல்லை. ஐ வென்ட் இன் ஃபண்ட்ஸ் இந்தியாவில் ஆர் சம் ஸ்கிரிப்ட் பாக்ஸ்ல வந்து ரோபோட் பேசுறி மாதிரி சஜஸ்ட் டிட் இட். அதுக்கப்புறம் என் ஃப்ரெண்ட்ஸ் தே ஆர் இன் மியூச்சுவல் ஃபண்ட் இண்டஸ்ட்ரி லைக் பேங்க் professionals. They gave me a portfolio of some 15-20 stock mutual funds, right? டெட்ல 10, டெட்ல 4-5, ஈக்விட்டில 4-5, அது இதுன்னு சொல்லி கொடுத்துருந்தாங்க. So 2019ல வந்து what changed thing is, like I said, ESOPs வந்து and RSUs from I was worked in a global tech company, so I got RSUs from this American firm. And again, I worked in e-commerce giant in India, unlisted stock. I had some ESOPs, very minor stocks, but it's good. So I saw the appreciation happening in at least in portal. I was like, okay, good. So if I keep holding some good assets, and COVID time I saw my American stocks went like crashed by 50%. And it's not in lakhs, so it's very big money. It's been crashed in front of your eye, but I saw the recovering in next 6 months, right? That's the moment I realized that gave me conviction. If it's a good company or good fund, if you keep quiet, it will take off. The return to mean will happen on its own. That is one revelation. Number two, I met this financial planner. It's a fee only planner from Pattu's blog, right? So I found out one person, and luckily he had a slot. So I met him. This is 2019. So I met him, and he took me he took me through the process. He consulted, and we worked out an Excel sheet, multiple Excel sheets, where he projected my financial cash flow for the next 40-50 years, right? So that was life changing, because till that time I changed all these things from taking out in mutual funds, everything. I was doing proper active funds, right? I kept something for 3-5 years. I saw decent growth. அவர்கிட்ட பார்த்ததுக்கு அப்புறம் தான் வந்து two things happened. ஒன்னு வந்து it gave me clearly that where I am in right now, right? I worked out with him in terms of my income, expenses, assets, liabilities. அதுக்கப்புறம் என்ன கோல்ஸ் இருக்கு, லைக் கிட்ஸுக்கு மேரேஜ் என்னென்ன பிளான். So even he went me through how many kids you are planning. So அந்த வரைக்கும் he took me through in depth.
Brilliant.
He gave me a cash flow. Then we found out that if I do what I'm doing, I can retire in 2042 or 2040ish, right? So then it was interesting. When I say retire, again, not like just sit in the easy chair, like stop working for 9 to 5, do something which you like, but basically the moment where you don't need to work forever for money. And the point on he gave me clearly. Then what I did is, then he, of course, he gave me his point of view of what kind of investments, equity exposure, how much should I take. So based on all these things, basically he said that since you have high equity appetite and you have very good risk tolerance, we can do 90-10 in terms of like equity and debt. And he saw my portfolio and he cleaned that up, right? So we went into from 15 different funds between equity and mutual funds. We went to 5, not 3 equity and 2 debt in the right portfolio.
Right.
Adu vandu then, and that helped me a lot, because one, it gave me peace of mind, saying that a personal professional is advising me, and then I'm handholder by him. Number two, I have a simplified portfolio. So now we took it everything into consideration, like including my equities, which is not listed also, it's part of my mix. So last 6 months back, he said again, but don't, in equity is good, but you are overexposed in equity. Now, next 8 to 12 months, you do only liquid. Just build up your cash. Don't worry about anything. Just build up. Say. So while everything is going fine, there is someone to advise me. இது பண்ணாத பண்ணாதன்னு சொல்றதுக்கு. So now I'm in a position where I can have a very good sounding board. Up on top of that, நான் சொன்ன ஷாம்சேகர் சார், நாகப்பன் சார், சுப்ரா சார், I keep watching their point of view. They also guide me, right? So I take them as my guides. So everything boils down. This is my pre-index fascination point, which happened 1 year back or 4.5 years back. So I park it there. Index and everything will talk in detail because I want to make it.
Actually, you've already covered one of the important points that I wanted to discuss with you, asset allocation, which is how much should go into equity, how much should go into debt, what needs to be done. It's something which you have already covered. So I'm very thankful for that. See, you also mentioned that you spoke to a financial planner. So you still use this financial planner?
Yes, I still have him.
Wonderful. Great.
I see. One other good point is the financial planner I'm talking to. He's a very genuine person. Of course, he's RAA, so he can't execute. He's not MFD. So he used to handle Canadian pension funds, right? So he saw from the global perspective, right? And when I went to him with my thing of can I do index only portfolio, he did some research and he said that yes, of course. So he also appreciated that. And like one and a half years back, I had a combination of direct equity from Indian market and US stock, which is listed and vested, and unlisted stocks. There are two startups. Yeah, one a social media startup, one e-commerce startup. So I had the unlisted shares, right? So he looked at everything from that perspective and he guided me. So so I handle my wife's portfolio separately and my portfolio separately, but look at it as a whole, as a family portfolio. Right? And her thing is also very simple. It's one flexi cap, one index, and that's it. And right now, so we're building debt. We are putting in liquid funds, not even other ultra short bond, all those things. So it's very simple. So wife has one index, one flexi cap. So I went and spoke to him saying that, see, I have 3 equity funds and 2 debt funds. While I'm fine with debt funds, I want to clean it up and I'll do with one fund. So I told him that, of course, Nifty 50 is good. My wife has it, but I don't want to balance it. Like you said, that's why asset allocation also came in that I don't want to have a mix of everything. Then we had debated between asset allocation funds, multi-asset allocation funds, and this one. So, and since we buy gold, like it's very big part of our family. This one wife has a chunk, and we also bought from a daughter SGB, everything. So I told him that see, gold is there. So again, real estate, we already have a home. We plan to other big goal is that, but we have that already. So I said I would like to go with Nifty 500 or BSE 500. So that's when it started. So after all these discussions, he ran the math and he said that yes, you can do 1 sec. So yeah, he gave me his point of view and we aligned and we started. So within 2 days, I liquidated everything from my active, just move into Nifty 500. But before that, it took me some time to convince myself. That's when all the books I mentioned. So John Bogle's book and about investing, and I read multiple books of him that convinced me with all the data. Of course, see, one challenge is I can afford to do that because of my other option, like ESOPs from startups and US company startups. And I agree with Shyam sir that index is not well structured in India. At least we can't look at US point of view. But I look at the data last 15-20 years. And one more thing, what helped me is that when we made the plan, all the goals we had, daughter's education, everything, and we took a number of 10.5% as a SIRR as a goals benchmark,
Okay.
right?
Okay.
So because of we took a very conservative number, my goals are based on that. That's when I went, okay, fine, index can do the job for me. If I get more, it's a bonus, right? That's the point of view I took it. One more thing helped me is that during COVID, those 2 years, I worked from home. Luckily, I was in a rental place, so I vacated my place, put it on a godown. I said all the money that went to my daughter's corpus, right? So my daughter's education till college is taken care with those 2 years of savings. It's done, and even a part of that went to his marriage. Corporate is growing, so that gave me some freedom to take a decision on one fund, which is Nifty 500. Right, it might not work for everyone, or for people who are starting their job, they can start with that till they get to see multiple cycles for 3-4 years, 5 years, then active. But I believe that we should have an active portfolio, at least in India. Combination of active and index will do the work from the astrolocation perspective.
Well, this is where I would probably tend to differ. I was actually, you should go to the Amphi India website and just look at the performance data that Amphi India shows. Okay, even on the home page itself, it shows a performance data. Right, there is something called View All, and you just need to go to fund performance. If you go there, you would see that over a 5-year period or 10-year period or whatever. Now, let's take a simple large cap, or let's take a simple, even in the small cap space, where people speak about generating alpha, which is more than the benchmark and stuff like that. No, almost 60, 70, 80% of the funds have not outperformed its own benchmark, right? So I have my own views on that, but I will park that. This podcast is more about you. So that other தனியா வச்சிருவோம்.
Ama.
But anyway, I wanted to also understand. You also spoke about participating in stock markets directly. You did mention about unlisted, which is not something a lot of people will be doing, or even if they do that, it's like let's just try it out kind of a mode. We will stick to the broader mutual fund index space. Now, which, as a common man, what is more important to you, the safety of the funds or the returns?
Yeah, so good question. So I'll touch upon index direct investing also. So like everyone, I tried my own tips based investing like 10-12 years back, right? So Quora now on the Twitter la பார்க்க மாட்டேன். அப்ப Quora தான் பார்ப்பேன். So because Quora used to be the echo chamber. So actually I made some decent money that time. I put some, I don't do F&O and trading. Don't even know how to do that even today, which is good. I just buy something, keep it for a month, I sell it. So all these companies they used to talk about, of course, see, had I kept all those companies even for now, I would have made some money. Okay, அப்ப வந்து ஃபண்டமெண்டலா எனக்கு தெரியாது. Then I subscribed to Prime Investor. So they gave me a good research-based thing. I used to buy stocks based on the advice for close to 1.5 years. In which I entered based on their recommendations only. So, but I used to invest with good conviction. Even there, I never did on my own, right? So I read their research. Out of 10 stocks they do, if I like 2-3 stocks, I'll buy it, right? And I put big money. In which I put some 25 lakhs. I put it on InVITs. But the thing is, everything changed after my reading, saying that again, entry timing has to be perfect, and the sector understanding has to be perfect. And then I realized that either I had to do mutual funds, either index directly, or go with someone like, for example, Shyam Segar sir. If I had a plan B, I will go with him because I want to go to professionals, right? So that he can manage my portfolio as a fund manager. And I already had advisor, so I took his advice on the mutual funds, right? So that's when I realized that direct stock market is not for me. You have to spend a lot of time understanding multiple dimensions, like what is this company's next 3-6 months based on the multiple dimensions, global scenario, everything is connected. It's not my cup of tea, right? So I stopped that. And then I went to that's when I moved to the mutual funds part of it. And again, like I said, since I have a perspective from my advisor, for me, returns and risk are like it has to go together, and especially if money matters, right? So it's like, for example, imagine everyone likes to drive BMW because of driving pleasure, right? But we wear safety belt for what if moments, right? So for me, returns are good, but we need to understand how much returns, right? So like again, John Vogel's book Enough, right? The first page he beautifully explained the mindset. Moment you know what is your enough, it can be 10 crores, it can be 100 crores, it can be 2 crores. It's personal. That's why it's personal finance is personal, right? I found my number based on the goals I had and my personal liabilities assets. Now I have zero liabilities, right? I closed everything pre-COVID. I was lucky to have a hunch to close everything. I finished that, right? But some people can't be in a position like me because I believe, even though I came with my own hardships, I like privilege to have all these things, right? In like year stocks, everything. But it's about individuals think on what is that they want out of their money, right? One thing you said is buying freedom, but trust me, people will come to the conclusion after 10 years of 10 to 12. It took me 10 to 12 years to understand that, okay, my money has to buy freedom, right? Again, my point is once people find out what is that enough number for them. For example, they might want to retire at 50, or they want to ensure that I had to have X corpus by then. So if I put now, what can I get it? What kind of returns? Like I said, I'll be achieving my goals with 10.5% returns, right? So that's why I took a index based approach where I know that it has a very high chance of meeting that number with less volatility, or like not volatility, with a very high chance of meeting that number from the past data. 10.5% is a conservative number, I thought, and that's why I took Nifty 500 instead of like, okay, let's have all the mid and small and large caps also in between, and the that is for the return part, like because I know that the minimum returns I can expect from this Nifty 500 is this much based on the past data. So let me go with this. Number two, safety also. That's when you build a corpus, right? Like liquid fund corpus. So like I'm going with 90-10 equity and 10% in my liquid funds. The last 1 year is different. I'm doing reverse. Like I'm last 6 7 months, I have zero equity, everything in liquid. So that's for the safer part. So I prepare for the this kind of events and have some cushion. And of course, term insurance, health insurance, everything is there. And might be another 10 next after 10 years, I might have different perspective towards safety. But right now, I look at returns, which is not like a fancy returns like 15% CAGR every year. Like market doesn't owe us. So I expect to plan for the event where I can get 10.5% and meet my goal. Conservative, anything extra is bonus. On this, on the safety part, like the seatbelt in the car, like have some cushion in terms of moments emergency. Of course, emergency funds should be there, and keep some money aside for events like like 2020, whatever it is. So and most of my safer part is based on my insurance coverage. So I have adequate coverage in terms of term insurance, health insurance, and everything. So that's what primarily my safety net. And I don't chase fancy crypto, for example. Many people do that. So I don't do trading. I don't do those kind of things. So I'm a bit conservative person. So
it's actually it's absolutely okay to be conservative. In fact, I would actually say 95% of salaried individuals are conservative, though they think they are either aggressive or moderate. Now, I just wanted to two last questions. One is linked to the previous question. Actually, both are linked to the previous question. Question one is, you said that you in the last 1 year you're adding only to debt, essentially to liquid funds. That is to bolster your cash, right? My quick question on that is, what would be your overall, like overall equity exposure, like, you have, let's say your total portfolio is 100 rupees, what percentage of it is in equity, despite you adding 90% of money only into liquid in the last 1 year? Alan, you're with me?
Hey, sorry, I was on mute. Sorry. So what I was telling is, of course, I track almost every 3 months we have a review with my advisor. It's not like detail. We just say here what it is. This is what we did it. 10 minutes every 6 months we do a detailed review. So if you look at, including if you look at my RSUs, which I got my like American companies, it'll be easily 90% of my portfolio is equity, because that's very it will inflate that. If I remove that element, it will become like 70% equity or 75% equity remaining in debt. So but
Brilliant.
I look at everything at a whole, and this is my entire family portfolio, right? So including
Brilliant.
vice portfolio.
Brilliant.
And gold is not part of this mix. Moment I add the gold we have at a family perspective, it become like 80% equity, like 10% no 85% equity, 5% or 8% gold, remaining will be debt. Very high equity exposure, mostly
Brilliant.
through ESOPs and Nifty 500 and my
No,
wife's.
it's actually good to have 70-75% equity in this current year, in my view, as well. For most people, I mean, this is not an advice. Disclaimer, please listen to our disclaimers. No part of this podcast is meant to be advice or selling of any service or product. But being in 70-75% equity at this point of time is something which I also believe in at this in
Yeah,
this
many
current.
times you have to have the stomach for the crashes or downside. So like I said, in COVID, I saw 50-60% of the portfolio vanish in front of my eyes. It's a very big money, and that gave
But
me that stomach.
it came back in less than a year. No,
Yeah, absolutely. But at that time, I didn't know. But now I know that
right.
the hindsight, I know that luckily I waited. What if I sold? I'll regret forever. Even now, some stocks were like last 3-4 years they gave negative returns. But now I know that, like I said, listening to all these, like Shyam Shekhar sir and Nagapan sir, kind of Subra sir, kind of a thing, gave me a perspective. If you buy something good, if a conviction, if you stay, it will eventually work out, right? Of course, hindsight, I can look at, okay, I should have done this, I should have done this, right? But the main thing is, even my advisor says that you have a high equity exposure for the market. He advised me to sell my US company stocks, but I refused to do that because of my own conviction. He's fine with that. So like I said, I'm
Brilliant.
okay if there is a correction happens, even to 50%, I have the stomach, right? But many people will not. So they have to be clear, all these things, like okay, I can stomach some 25% only, I can't see more than that. They have to look at 50-50 or 65-35, depends on their comfort zone. You are right, it's about individual appetite on the mix, equity, debt, and
Brilliant.
gold.
Brilliant. Brilliant. Last question, Alan. You don't need to exactly tell me the number. I mean, I was about to ask you what is your retirement corpus goal. But if you're uncomfortable, you don't need to share that. But how did you go about calculating it? Because you have already told me a lot about how you are approaching your investments and stuff like that. But how do you go about calculating it? And how far away are you?
Perfect. So, like I said, okay, interesting question. Like I said, I went to my RIA. He gave me a cash flow projections. He had a very good sheet, right? So he's pretty advanced guy. So he did the cash flow projections for the next 40-50 years. And like I told you, we found out this is 2019. Then he told me that, you know what? So 2040-ish is where you can, no, 2035 is, 15 years from that time, very very safer side. Okay, so if you're, I had some multiple goals, I have to calibrate it. But when we kept meeting last 6-7 years, it went really well, and I increased my, like, and wife also started working, so we had a very incremental money, invested everything as per his advice. Now the number says as per the projections, it's very complicated projection from his side. So the number now says 2020, 2031. Okay. But again, depends on all the goals. Like we had a goals to build a house, for example, even though I have a home, but I had a plan B.
Yeah.
Yeah. And the number, it's not to be frank, it's number, but some people might think it's okay. It's not a big number. Some people say it's a big number, but my point of view is that it's not about the number. I'll stop at that time. Once I have my own comfortable range where if I get SWP or anyway, I have some passive income, right? For example, my home, we have a rental money, small, but still my parents are getting us. So something is there. But my point is when I'll be comfortable with, for example, okay, I made a calculation based on if I want to sustain my present lifestyle 10 years from now, what will be that money? it it came out to be very small number only. So we live a very simple life. So like provided the homes are paid off and we have a nice like a farm kind of a setup where we do our own self-sustained lifestyle, I can live with might be 75,000 10 like 6 7 years from now, okay, in Coimbatore. So that's a decent money and to live a comfortable life. And because of that number, I'm very relaxed, right? So it's not about I have to make 10 crores to make it. I can even once I even make a 5 crore corpus or a 3 crore corpus, okay, or 4 crore corpus, I can live with 75 to 80K per month. Live a comfortable lifestyle, which I'm doing right now. So I looked at that number, right? But if I had an ambition of having a very big house, like one trip every year in Europe or one BMW, it might stretch. It's a personal choice. So like I decided to have a comfortable life, decent like a post-retirement lifestyle, do some consulting work and everything I had planned for. So for me, it's not about the number of like what is the final corpus number. It's about to maintain the same lifestyle during your retirement. I think how much money you need. Based on that, I calculated a number. But I would say that I looked at from like 1 lakh a month. What is today? It sorry 75K today might be 1.2 lakh then 10 years from now. I aim for that. The starting point is I should get 1.25 lakhs as my income from my corpus, like mainly SWP or something. That's why NPS also played a major role for me. So that's a layer two for me. So I was late to NPS, with regret it even today. It's been 5 years, but still I was late. So my belief is that my mutual funds will give me a head start to the retirement for 10 15 years. Then my NPS will kick in. I'm sorted. So that's what my retirement plans are.
Brilliant, brilliant. Hey, Alan, many thanks. You touched upon a varied set of subjects. You also called out some really illustrious names who are my colleagues, stroke competitors, stroke people who we have mutual respect for. I don't know about them, but I'm saying mutual respect. But I respect all these names, and we've all learned from each other so much. And I'm so glad that you consented to come on this call, this podcast. I'm just going to take a few seconds to kind of summarize my learnings from whatever you have spoken till now. One of the first things that I learned is very heartening because it also helps my profession. Please find an advisor, right? Whether you, even if you are going to do it yourself, it's important to have an advisor who will be at least like a sounding board, who will guide you through this process, or at least logically dissect whatever your decision making is, and guide you through this investing journey. Second thing is, please make all your mistakes as early as possible. In the sense, you did speak about investing in direct equity and making money in some, losing in some. All this pretty early in life makes a huge difference. It helps in fine tuning your own strategy and stuff like that. And third is always focus on your safety net while you are focusing on the returns as well. This is one of the important points. You did touch the topic of asset allocation as well, without even me bringing up the topic, and when to do what, right? With the help of your advisors and stuff like that. So very thank you very much. God bless you for this, Alan. So I hope you had fun doing this. I had fun doing this, and I look forward to interacting with you a lot more than this. Yeah.
Thanks, Nanda. Appreciate it. You are right. So, like I said, from my learning for the last, I would say 15 years of doing something in the 12 to 15 years, I was like in this journey. My only request to people who are starting today or people who are ready to start, forget about the age, is start somewhere, right? So if you don't have advisor, then at least do index fund. Start. You should see the equities or your instruments fluctuation at least for one cycle, 3-4 years. You'll have convictions. Then things will happen for you. Start somewhere. Don't delay it. And if you get advisor, like good advisor, it's like good. You're sorted for life. And then just let's stop doing some things for quick rich schemes like crypto or F&O trading. If you're not experts, then don't do that. I think we'll be sorted if we keep doing investments in any fund, active fund, index fund. But discipline is keep moving. Don't be sporadic, and please take insurance. So it will save lots of heartburn when something happens. So that's all it is from my side. Thanks on the.
Thank you very much, Alan. Absolute pleasure.
Thanks, Chanda. Thanks very much.
So that was today's episode. Thank you very much for listening in. We hope to see you soon. This podcast is intended to provide helpful and informative material on the subject matter covered. It is given with the understanding that the podcasters of this material are not engaged in rendering professional services through this program. If the listener requires personal assistance or advice, a competent professional should be consulted. The podcasters specifically disclaim any responsibility for any loss, liability, or risk, personal or otherwise, which is incurred as a consequence, directly or indirectly, of the use of any of the contents. The contents are general information that is intended to, but not guaranteed to be correct or updated. The information is not presented as a source of investment, insurance, or legal advice. You should not rely on the statements or representations made in this podcast or by any externally referenced sources. If you need investment or tax advice upon which you intend to rely in the course of your financial and business affairs, please consult a competent, independent, registered financial advisor. The content should not be taken as financial advice or as an offer to buy or sell securities, insurance, funds, or any financial products. It should not be taken as an endorsement, recommendation of any particular company or individual, and no responsibility can be taken for inaccuracies, omissions, or errors. The information presented is not to be considered as investment advice. The podcasters do not assume any responsibility for actions or non-actions taken by people who have listened to this program, and no one shall be entitled to claim for detrimental reliance or non-reliance upon any information provided or expressed herein. Your use of any information provided herein does not constitute any type of contractual relationship between yourselves and providers of such information. The podcasters hereby disclaim all responsibility and liability for all use of any information in this program.